Warren Buffett's interpretation of financial reports. Number 51. The cash flow statement. We have the choice of two methods. Accrual, or cash accounting. Cash method, the sales are booked when the cash comes in. The accrual method, sales are booked when the goods go out. The cash flow statement show us if the company is bringing more cash in than is going out. A company can be profitable, with lots of sales on credit. With not a lot of cash coming in. More cash coming in than going out equals positive cash flow. More cash going out than coming in equals negative cash flow. The cash flow statement has three sections. Number 1. Cash from operating activities. Number 2. Cash flow from investing operations. Includes capital expenditure, which is always negative. Number 3. Cash flow from financing activities. Includes dividends and buying and selling company stock. Add total cash from operating activities with cash from investing activities plus total cash from financing activities. We get the net change in cash. Another business tip from Learn Accounting Fast. Next, see what could make us our next billion.